on. So let's just take things back a little bit. So first we had a 15-minute imbalance over here. So this was price giving the 15-minute imbalance over here, so here and here. And once you had that imbalance, what you're looking for is the candle before. So you're looking for this candle here. Now, this was the key level from 68.90 to 68.80 or 82 area. Now, what made this a key level specifically for me was two things. The first is we had a fair value gap, 15-minute fair value gap here. The second thing we had is we basically had a short from this position. So I took a short from here on this day and price obviously melted lower. Now, one thing I recommend everyone doing is if you have your levels on the chart, specifically backed up by order flow, and we're going to be going over that. Once you have your levels backed up with order flow, you want to keep those levels on your chart and extend them to the right. And that is basically what happened today. That's how today's trade was caught, right? So there was obviously key level. This was a key level because there were sellers sitting in this region, passive sellers specifically. Now, when I extended this area to the right, we saw the markets coming back into this area and giving us the sell-off. So passive sellers stepped in here. 3 weeks later, we see passive sellers stepping in here, right? So this is the same key level, same sort of area. Now, this is where it gets a bit more interesting. So when I look at the charts, I want to look at things in terms of 4 basic pillars. Now, the more mechanical you can keep your trading, the more frameworks you have around your trading, the better it's going to be for you, because you want to approach the charts with the same philosophy every single day. Same mindset, same rules, same frameworks. That way it's very difficult for you to break your rules, so you can actually start to see where you are disciplined. So there's 4 things I look for